Hello, ladies and gentlemen. Good morning from this part of the world, and depending on what time zone you're tuning in from, I do want to wish you a good afternoon and good evening. Welcome to a brand new session of our Forex Morning Mastery. I hope you all had a great week, and of course, we are preparing. Um, Adequately ahead of the second half of the week. We've got a lot on our radar today. In fact, gold is holding firm despite some early selling pressure. The crude oil is reacting to Trump's tariff threat and OPEC Plus output plan. And of course, the USDJPY is dancing around a critical area as market participants anticipate the Fed's reserve interest rate decisions today. And of course, with traders waiting on the FOMC meeting and US economic data showing signs of weakness, this could be an interesting session ahead. So if you are a fan of the USOILSPOT, the USDJPY, and the XAUUSD, you do want to stay tuned in as we have some exciting, insightful trading setup to help us navigate this market today. I'm really excited to go through the setups and opportunities with you today. So stay tuned in, grab your favorite beverage, and do not miss out on this one. And for those of you who are joining us for the first time, you are highly welcome on board. I'm very excited to have you around with us this morning. My own name is Sharif Daramola, and I'm going to be your host for the next 30, 40, 50 minutes, depending on how the analysis goes through. The Forex Morning Mastery is an educational platform where we come together to have a deep understanding of the behavioral patterns of market participants through the lens of price action and fundamental analysis. And we run this session 3 times in a week, that is Mondays, Wednesdays, and Fridays. So you're highly welcome, guys. Very excited to have you around with me this morning. And do not forget to give the video a thumbs up. Your likes are valuable to the community as it helps the algorithm push the video to a wider audience of traders. And feel free to engage in the comment section. So with that being said, here we will be diving right into the business. So while I was looking at the comment section, I see you there, Torres Master. It's been a long time. How are you doing this morning? Happy New Year to you too. I'm very glad to have you around with us this morning too as well. So you're very much welcome. So with that said, let's run through our daily routine. You know how we do it. The first thing we normally do is, of course, to keep tabs with the fundamental factors that has been and will be influencing the sentiment in the market today. And of course, based on the asset we are monitoring this week, which includes the the USDJPY, the USOILSPOT, and of course the XAUUSD, we have been monitoring economic features from both the United States and the Japanese economic docket. Though this week is a little bit scanty with high impactful events, so we had to include some mid-tier economic features to have an insight into what majority are looking at to make their informed trading decisions. Now, so far this week, we've had some interesting updates, especially from the United States. Look at the new home sales. In fact, a report from the United States this week hasn't been promising, as data has been coming in lower than what market had expected. So let's look at what has been going on since Monday, January 27th. Now look at what we have here. New home sales change came in 3.6%. That was way below what the previous month data came in at, which was 9.6%. Then, of course, we saw the durable goods order yesterday, all of which came in way below what market had expected. Market were, in fact, looking forward to a 0.8% expansion after a woeful report in in November, but surprisingly, the data came in at a deficit of 2.2%. We had a good news on the housing price index, which was above expectation, but not necessarily promising, as we saw here that the previous month came in at 0.4% expansion. So the data hasn't been really that tight from the United States economy. And of course, I think we also have another data which I'm surprised I'm not seeing here. Let me see. Is that all we have? Okay, I'm not seeing the jobless claim count here. I read something about the jobless claim count in my financial feed this morning, but it's not here. I don't know why that is. But anyways, we haven't seen something tight from the United States so far, and this is coming as market participants are looking forward to major events today. Now, today, Wednesday, January 29th, we are looking, in fact, to the most important event for this week, which is the Fed's interest rate decisions. Now, this is coming up much more later in the day, actually. What time is that? Let me see. Hold on a second. Hold on a second. I need to set. Okay, so the timing of this is coming in by 7 p.m. UTC. That's about 8 p.m. local time. And for those of us who are not familiar with this report, well, the Fed interest rate decision is the outcome of the Federal Reserve meeting, where they decide whether to change or maintain the current interest rate. And this decision usually and theoretically has a significant impact on market sentiment, as it reflects the central bank's assessment of the economic conditions, and any changes can influence borrowing costs, investment, and overall economic activity. And from the popular sentiment, there is these high expectations that they will leave interest rate unchanged due to a couple of factors like the Trump's tariff and policies, which is supporting the United States business. And with this, there is the expectation that inflation will increase in the United States. So there is a high chance that this interest rate will be left unchanged, despite the fact that the Fed had projected a handful of rate cuts for the year 2025. So we're definitely going to be looking forward to this event today. That's about, I think, 15 hours from now. So we look forward to see what the actual data will be. Will it be just as market had expected, below market expectations, or even beyond the expectation? But one thing we do understand from a theoretical understanding is that if this data comes in below expectation, it wouldn't really cause any surprise in the market, as the market had already priced in this expectation prior to today's session. So we might really not see major traction. However, if it drops, that is, if they cut interest rate, this may likely incite negative moves against the US dollar, and this could increase traction for the gold commodity, for instance, the Japanese yen, for instance. However, if it comes in higher, which is not likely, then we could see a positive traction in favor of the US dollar. So this is one event everyone is definitely looking forward to. Then simultaneously, the monetary policy report will also be released. This is a report that will give us comprehensive assessment from the Fed, detailing the economic outlook and the rationale behind the monetary policy decisions they made earlier. So its impact is also very significant in the market. Then 30 minutes after, there will be the FOMC press conference where the Fed chairman communicates the Fed's monetary policy decisions, economic outlook, and of course, it will be answering questions from the media. And of course, everyone will be looking forward to his rhetoric, as investors will like to get an insight into the future interest rate changes and overall economic conditions for their informed investment decisions. So basically for today, Wednesday, January 29th, we're only looking forward to this event, all of which are coming in from the United States. And we may likely see some extended sideways trading activity ahead of this event as major key players step aside from the market, waiting for this decision to come in before making any investment decision. So we're definitely going to be taking all of this into account while we review the current market dynamics of each of the assets we are monitoring for today's trading session. So with that being said, here we will be diving right into the business. And as always, the first asset we are going to be taking on this morning is going to be the USOILSPOT. And on the USOILSPOT, we've had some quite interesting situations so far this week, but it hasn't really dovetailed to significant profit for us on our US oil portfolio. And for those of us who are part of our Monday session, remember we had a beautiful structure identified after marking out a descending trend from last week Wednesday. As you will see, this is further emphasized after connecting the series of lower highs, as you will see here. And it appears that the market dynamic is gradually shifting away from this particular trend line. So let's take a quick look at it all over again, as it seems that things have changed a little bit. So I want to readjust this trend line to capture the majority of that pivot lows. Okay, so we have it here. So things have changed a little bit. So this is one important thing we need to always take into account while we are reviewing our structural details on the chart, as the market is shifting, and we also need to shift in proportion to this to the frequency of the movements, as this will also help us to position ourselves in the most appropriate area for any trading opportunity. So we have a new trend line right now which captures most of those lower highs. Now, as it is right now, we saw at the beginning of the week that price action initially was oscillating around our key level. This was our key level for this week. That was the $74 area. And in fact, price traded around it for about 12, 13, 14 hours, giving us this range-bound structure as price remained confined within the $74.33 level and the $73.40 area. And if you remember vividly, we talked about looking at selling ideas if price action breaks down the $73.40 level, and of course look out for buying ideas if price action breaks above the 74. And during our live session on Monday, I told us I had a buy position triggered, which obviously did not do very well. But as soon as price broke down the $73.40 level, the support line, we had a sell position triggered there. And in fact, price moved about 120 pips thereabout before price snapped back into the entry point. So I was able to make a reasonable amount of profit. I think about 60 pips thereabout after moving my stop losses accordingly. And I do hope you did the same too as well. And for those of you who capitalized on that one, well done and kudos to you. So moving on into today's trading session, things are beginning to shift drastically, and these are due to a handful of economic factors behind the scenes, which we are going to be looking at in a moment. However, trading this asset today, there are some couple of things that we need to pay attention to. One of the top one on the list is the FOMC meeting outcome, which is coming up later today. Remember, the US crude oil commodity is a US dollar denominated asset, and whatever happens to the US dollar will definitely influence the price of crude oil. Now, if the value of the US dollar rises, definitely the crude oil becomes becomes much more expensive for other currency assets to buy, hereby reducing the demand for crude oil and putting selling pressure on this commodity. So if the Fed's policy decision will influence the US dollar, which in turn affects oil prices, a hawkish Fed could keep oil under pressure, while a dovish shift might support a recovery in crude oil. So please, let's take note of this. This is one event we are looking forward to. Then we saw the inventory report for yesterday, which I will be talking about in a moment. So we are still expecting another one today. I think that's also coming up much more later in the day and could provide further direction into what is going on there. If it is a lower than expected build, which may support a short-term rebound in crude oil prices, then we're also going to be paying attention to signs of economic recovery or stimulus from China as well, the largest importer of crude oil in the world, which could also boost demand expectation, helping oil prices to stabilize. So with this understanding in mind, what are the major factors at the moment that is going to be influencing crude oil, or probably de-influencing? I don't know if there's a word like that. Presently, the path of least resistance for crude oil commodity seems to be to the downside, and this is due to Trump tariff threats. We talked about this on Monday. The US president plans to impose tariffs on Canada, China, and Mexico, which is supposed to be executed by February 1st, and this is raising concern about lower global fuel demand at this point. Then the official Chinese PMI report, which was released on Monday, indicates continued economic weakness in the world's largest oil importer. And you know how that is. If the Chinese economy is not doing very well, it definitely influences negatively the sentiment around crude oil prices, as if the economy is not doing well, it is expected that demand from China will reduce. Then another feature that is going to be exerting pressure on oil prices is the supply dynamic, where Trump's push for increased domestic energy output alongs demand from OPEC to raise production. And you know what that means. When this happens, supply will definitely increase, and if supply increases, our simple economics tells us that prices will drop because of the too much availability of this product in the market. So this is definitely going to continue to support this downtrend scenario we have been witnessing in this market since the beginning of the week. And of course, the Federal Reserve's expected hawkish stance is keeping the US dollar supported in the meantime, making oil more expensive for holders of other currencies, which could also impact negatively on oil prices. So I still strongly believe that the price of crude oil still remains to the downside. And look at it on a structural detail here. Price continues to trade below that descending trend line, which continues to support that fundamental narrative I just talked about a couple of minutes ago. Now, with this in mind, I'm not going to say that because the dynamic is looking very bearish, that we ignore the potentials that buyers could also come into play. Of course, you know how we do it in this community. We always try to prepare ourselves for whatever opportunities the market presents to us. Now, if we look at the API report from yesterday, we saw a smaller than expected US inventory build up, where the API reported a 2.86 million barrel increase in US oil inventory. Now, when there is an increase in US oil inventory, it is a sign that the supply in the market is way higher than the demand. So they were able to store some crude oil last week. But the twist to this is that it was slightly lower than what market had expected, which still shows that there is still a sign of increasing demand in the market as well. Now, this could ease supply concerns and help limit oil prices to the downside. Then, with the Federal Reserve's FOMC meeting coming up today, traders may be very hesitant to take strong positions or make aggressive bets ahead of this event, preventing further sharp declines in crude oil prices in the short term. Now, if you look at my trading panel right at the bottom of your screen, you will see that I do have a sell position triggered, which is obviously due to the fact that price is trading below our descending trend line and of course the key level we identified at the beginning of the week. And of course, you know how we treat our descending trend lines. As long as price remains below the trend line, we'll continue to look out for patterns and structures that support selling ideas. Now, the only condition that can make us buy based on what we are seeing on the chart right now is for this descending trend line to be breached, broken to the upside around the $73.40 level, retested probably to incite some buying ideas here. And of course, look at that $73.40 level. It was the initial support line for the week. So that area has a memory for buying power. We saw what happened at the beginning of the week, how price moved about, how many pips was that? About 140 pips from that particular area. So if price can climb back above this level and we find buy pressure there, it could reignite the buy niche to incite some buy pressure. But if that does not happen and price continues to remain below this descending trend line, we have no other choice than to maintain a bearish bias. So for this one, I continue to hold on to this sell position, and I still think that we will have a privilege of maximizing the potential of this bearish move after capturing the series of lower highs here. Sorry, higher lows, sorry. So we have a temporary trend line after connecting that. And of course, if this trend line can be breached and broken to the downside, it could incite more selling ideas. So I'm looking at something around the $73 area, a level which we will be looking to add more sell positions to our existing trade. So let's mark out this level quickly and then use it to help us navigate more selling ideas around the structure. So look at how beautifully the $73 area lines up with that ascending trend line that we have here. So what I want to see here is a breakdown retest of structure, maybe on the 15 or 5 minutes time frame. It could be a retest of the 73 or the trend line. So I want to see signs that buyers are finding it difficult to climb back above both the ascending trend line and the descending trend line, and this will reflect on the chart as selling pressure, inciting more selling ideas into this particular market structure. So like I said earlier, we maintain a bearish bias here. I already have a sell position triggered, looking forward to add more if the market permits us to. Now, to place a TP target for this structure, I think it's quite a simple setup we have here. We had this impulse leg to the downside before price retraced back into structure to continue the downtrend move. So what we are going to be doing here is to project this impulse leg, and to do that we will need our Fibonacci extension tool, run it through the impulse leg and aim at an area between the 127.2 and the 161.8. So I'm looking at somewhere around the $71 area, which will be dovetailing to about 220 pips if price action gets that far. So I will place my TP target around the $71 area. Let's see how far this momentum is going to go. And of course, at this juncture, price is currently running with about 38 pips thereabout. So I would rather want to move my stop losses on the first sell positions to break even. Okay, so we have 73.340 right there. So there we have it. Let's see how far this momentum is going to go today. So that is my simple view of this asset today. Let's see how it runs. If you have any questions or you need some further clarifications, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions whatsoever before we move on to the next asset on our watch list. Stay tuned in and do not forget to give that video a thumbs up. Thank you very much. All right. I see you, C40. Good morning to you. Glad to have you here. All right. So, in the absence of no questions, I do want to take that as a confirmation that we are all on the same page, right? And please mark out the structures accordingly. If you missed out on that first sell position, you do want to be getting ready to join the second opportunity we have around the $73 area, where I said I will be looking out for a breakdown retest of that structure to confirm that this momentum will continue to the downside. So I wish all the best of luck on the US All Sport. So moving on to the next asset on our watch list. So the next asset we are looking at this morning is the USDJPY, where the US dollar has struggled since the beginning of the week. And for those of you who are part of this session on Monday, remember I talked about how the Japanese yen has a tendency of increasing traction this week due to the positive reports we are getting in from the Japanese economic docket. We had interest rate decision last week where the Bank of Japan increased interest rate for the first time in 18 years with about 0.5% hike, which obviously will be supporting the yen at this point in time, reducing the differential value between the US dollar and the Japanese yen. Then secondly, inflation report from last week was also high, showing that the economy is resilient at this point in time. And of course, we also have issues about wages, which obviously, remember there was wage growth expectation in Japan last week. We talked about this, where Japan's spring wage negotiation are expected to result in strong pay hikes, which could further support the Bank of Japan's tightening stance, and of course the Japanese yen as well. Then we also talked about Trump's tariffs plan on how it can influence the Japanese economy. The US president planned to impose tariffs on computer chips, pharmaceuticals, and metals, which is one of the major produce from the Japanese, and concerns about this incite inflation as well, supporting expectations for a stronger US dollar, and this could limit the Japanese economy in one way, influencing the Japanese yen negatively. Now, we also have a couple of other things too as well, which could favor the Japanese yen. We have a hawkish Bank of Japan outlook at the moment. We have wage growth expectations in Japan. We have narrowing US-Japan yield difference due to the interest rate hike last week. We don't know what the US will going to be doing. Are they going to be maintaining the current interest rate or cutting it? If they cut it, it will further increase the differential value. And then the weak US economic data as well is not really supporting the US dollar against Japanese yen at the moment. We talked about the durable goods order, which fell by 2.2% in December, which is not a good signal, showing how the US economic is slowing down in momentum at this point in time. Then also the consumer confidence index. Yes, that's the report I was looking for on the economic calendar. I don't know why that is not on the economic calendar. I don't know why that is. I can't find it here. Okay, it's right here. It's right here, but FX Street is not projecting the data here. So it actually dropped by 104.1 in January, reflecting economic uncertainty, which definitely could weigh on the US dollar. So for me, I still strongly think that the path of least resistance for USDJPY for this week still remains to the downside due to a resilient Japanese economy. But we never can tell what could happen today, especially from the Fed interest rate decision and what the Fed chairman is going to be saying about the US economy. So it's going to be playing a significant role, and this could result into extended sideways trading activities as major key players may step aside, not wanting to place aggressive bet at this point in time, waiting for this event to come in before making that decisions. Now, if we look at the technical structure on the chart, it is looking very, very bearish. Now, why have I said so? Well, we have about 3 factors here which supports that idea. First of all, our key level for this week is at the 156.00 level, right? And when price remains below our key level, what do? We keep on looking out for structural details that support selling ideas. Then secondly, we have a descending trend line after capturing the series of lower highs since last 2 weeks, I guess. Look at that, and price still remains below this descending trend line. And if you look at this, ever since this new week began, buyers have been finding it difficult to break through that descending trend line. See, every attempt they tried to do so, it kept on being negated by the sellers, pushing price to the downside, and this further emphasized the strength of the sellers at this point in time. Now, if you remember, at the beginning of the week, we had a major trend line on the 4 hours time frame, which is this one right here. For the sake of clarity, let me show you quickly so we can see this, so that we can all be on the same page. Look at that. So we have an ascending trend line after capturing the series of higher lows since last year September, as you will see here, and we saw a little bit of breakdown of the structure this week. So let me go back into the 1 hour time frame. So right here on the 1 hour time frame, you will see that we had a breakdown of the structure on the first trading day of the week. Now, from a theoretical standpoint, it is expected that when price action breaks a significant structure like this, it is expected that price will come back at some points, retest it to continue that downtrend move, and this appears to be what is going on here if we take into account the character of price action in the last 48 to 60 hours. Look at what is going on here. Buyers are losing momentum, and for me, this led to me selling the USDJPY below the 155.300 area, though the position at the moment is still running in a loss. But hopefully, if the market respect this bearish expectation, we may likely see price drop further to the downside. So for me, I will maintain a bearish bias on this particular asset, and the only condition that will make me buy is for price to break out of two structures. That is the trend line. I want to see price climb back above both trend line, and not only climb back above it, I want to see some signs that sellers cannot make it anymore, and this will reflect on the chart as continued buy pressure, has a retest of structure to continue that uptrend move. But if price still remains below this trend lines, that is this ascending trend line and this descending trend line you see here, I will be maintaining my bearish bias. So on the USDJPY, I've sold. I will continue to maintain the bearish bias, and please, we want to open our minds to the possibilities of price still coming back into the structure to insights to continue the downtrend move. So I'm still strongly in this sell position. So that is my simple view on the USDJPY. It's basically a simple trading setup. Let's exercise patience and see how the market is going to play out around this area. So please take note that we expecting extended sideways consolidation phase ahead of the Fed interest rate decisions today. So if you have any questions, feel free to let me know in the comment section. So as always, I will take the next 5-10 seconds maybe off to see if there are any questions before we move on to the final asset on our watch list today. And do not forget, let's make the number of likes tally with the number of people on board, and thank you very much as you do so. All right, so in the absence of none, I think we are all on the same page. Hope you've mapped out the structures accordingly, and let's see how this is going to play out. So we maintain a bearish bias. Look at something. We have like a double top structure here where the support line is serving as a neckline, and as long as price remains below structure, the bearish expectation still remains valid. So best of luck on that one. Moving on to the final asset on our watch list. So the final asset on our watch list today is my favorite amongst them, and that is the XAUUSD, popularly known as the gold spot. And for me, this week on the gold commodity, I've not really done very well in comparison to what I usually do during the midweek, as the market has been a little bit choppy. And in fact, we can see here on this chart that price is back within the range bound structure we identified at the beginning of the week. And of course, this is not coming to me as a surprise at all. Remember, we are in a week where majority are looking forward to the Fed's interest rate decision, and this could lead to players not wanting to make aggressive bets, stepping aside, waiting for this decision to happen before making any informed trading decision. However, during the first trading Forex Money Mastery for this week, we were lucky to mark out a range bound structure where we initially saw that price action was confined within the 2772 and the 2754, and of course the breakdown of the support line here incited a 200 pips move to the downside, giving us some I think I was able to close with about 100 pips on this one. That's about $10 on this particular account we are seeing here. And since then, the market has gone through a choppy condition. And in fact, yesterday I was not on my workstation, so I didn't trade the market at all yesterday. So I missed out on this bullish move that came to this point. And on one of my accounts, I traded this one. I traded this bullish move from here this morning. This morning, I scalped this area. Where was it? Okay, I think this one right here. Yes, I scalped this one into this point, and for the fact that price is above our key level again, I'm beginning to suspect that buyers are hearing something behind the scenes which we do not know, that is making them to rebuy the gold commodity at this point in time. In fact, there are a lot of things we need to look out for in this market. We need to monitor the FOMC decision, and of course we are going to be having an insight into what is likely going to happen about 2 hours, an hour before the Fed interest rate decision happens. Of course, we know that major key players in the market have insiders in this department that gives them clues of what is likely going to happen, and as a result they build up a position ahead of that event. And as technical traders, this is what we are looking at. We are looking for these trails, this footstep, to help us understand where the market is going. And I think things are looking in favor of the buyers at this point in time. Then we're also going to be watching the US bond yield. The Treasury bond yield is a very, very important indicator of the US dollar, where the current decline in bond yields could further incite weaknesses in the US dollar and provide support for the upside for the gold commodity. Then trade alert, trade war development is also needs to be monitored too as well. If Trump's tariff plan escalates into a broader trade conflict, gold could see increased safe haven demand. And to top it all, we're also going to be looking out for technical levels today that we will be using for our entry points. I will be sharing that with you in a moment. Stay tuned in. But before we go into that technical details, let's talk about the drivers of the gold commodity. And like I did say earlier, based on the recent activity have been noticing in the last 24 to 36 hours, I strongly believe that the price of gold may continue to rise. Now, why have I said so? Well, currently the US Treasury bond yield is low at the moment. It remains near a 1 month low, making non-yielding assets like gold more attractive for investors at this point in time. And of course, this has led to a weaker US dollar. Of course, we know how the US Treasury bond yield is directly proportional in value to the US dollar. So a slight peak in the US dollar provides support for gold as well. Then the markets bet on continued Fed interest rate cuts in 2025 will continue to act as a tailwind for gold prices. As you all know, lower interest rates reduces the opportunity cost of holding on to the gold commodity as the gold becomes cheaper if you are using the US dollar, and that will definitely increase demand for this commodity. And like I said earlier, the trade war concerns is also a priority in this market. I told you Trump is planning to impose tariff on computer chips, pharmaceuticals, aluminum, steel, copper, metals generally, and this raised fears of global trade war. And if this continues to manifest, it could increase demand for gold due to the uncertainty surrounding this, the implication of this, and safe haven asset will continue to rise. Then finally, we saw what happened yesterday. We had a weak U.S. economic data. The durable goods order declined by 2.2% in December, showing weaker economic activity. And of course, we saw the consumer confidence index dropped to 104.1 in January, reflecting economic uncertainty. Both factors support the appeal for gold. So these are the major reasons why I think the gold commodity will continue to rise. However, in as much as gold has a tendency of continuing to the upside, please don't let us ignore the strength of the potential strength of the US dollar, which could incite some selling pressure around the gold commodity. Remember, the week started on a strong bearish note. We saw what happened here. Price dropped down, and we could still see price do the continuation again today or the second half of the week. Then we have a stronger equity market right now. Generally positive tone in the stock market reduces demand for safe haven assets like gold, copper, and the likes. And of course, the market cautious approach before the FOMC meeting cannot be ignored as traders may be hesitant to take aggressive positions ahead of the Federal Reserve policy decisions today, and this obviously can also limit the gold movement. Now, with all of this being said here, we all agree with me that the path of least resistance seems to be to the upside. Now, in as much as this is the case, if we are going to be taking a position today, we need to be mindful that whatever position we'll take is going to be on a short-term note. We are not taking a long-term position around this area. So if you can just get the 100 pips out of a move today, is still very okay considering the FOMC decision coming up today. So there is a high chance that whatever trade we take, there is the possibility of price snapping back into the entry point. Now, moving on, we want to talk about how we are going to be navigating this market today. And I think I have a structure on the 15 minutes time frame. I think I shared that with you this morning. For those of you who are following me on my Telegram platform, I did updated us with a structure today, and this structure helped me to scalp this market this morning as I took my buy. Though initially I was in a sell, I sold right into this area. I think we had about 25 pips before price took me out of that position, and we saw this bullish move to the upside here, giving me about 60 pips before price drops back to the downside. So this structural detail I shared with you this morning still suffices. As you will see, price is showing signs of a downtrend, though this is coming off from an impulsive move that got us to this point. So we have an impulse leg, and since yesterday evening the market has gone through a consolidation phase, a reflection of indecision right now as market participants await the Fed's interest rate decision. And one interesting thing about this whole formation is that it is oscillating around our key level. So this morning we saw price break out of the key level and this descending trend line here hinting at a potential uptrend scenario. And from a technical standpoint, when price breaks out of a structure, there is a high tendency of it coming back to retest the structure in an attempt to continue the uptrend move, which appears to be ongoing at the moment. So we already have an impulse leg this morning. Will this retracement go to as far as the key level or this trend line, where the emergence of a reversal pattern like double bottom structure, inverse head and shoulder patterns could incite this uptrend continuation? So for me, I will continue to monitor price action around this area. In fact, I'm looking forward to retest of this area. That area between the 2760 and the 2758, which is around that trend line. So I want to see if price will come this far before I can start considering buying around this particular area. So I'm looking for something like this. Let me give you a visual representation. Maybe like this could form a reversal setup. Then I buy the breakout retest of structure to continue that uptrend move. And if that is not the case, if the 2762 continues to be a buying niche negating selling pressure, it could incite the uptrend scenario. Now if you look at this area around the 2762, you could see we have a hammer candle here, which is a sign that buyers are still present in this market. So for me, everything is still looking very bullish at this point. Then we have the highest level this week, which is at the 2766.25 level. So I do want to be marking that one out too, where if price could break out of the structure, we are going to be good to add more buy positions to our existing trades. So I encourage us all to mark out that level too as well. It's going to be playing a significant role in adding more buy position. So we at the Go Challenge platform will be scalping this market today as well in about an hour 30 minutes from now. I want you to join me on the Go Challenge, where we are going to be scalping this market, looking for 20, 25, 30 pips thereabout around this particular structure. We never can tell. So let's see in about an hour 30 minutes from now to see how we can capitalize on this one. So on the XAUUSD, let's maintain a bullish bias. Any structure that supports buying idea is what we are looking for to join a buy. Now, if I'm going to be selling the gold commodity today, I would like to see price drop below the 2758 and this descending trend line. So I would like to see price drop below these two structures before I can start considering selling. And if I sell from that area, we are likely going to be seeing a massive move into the downside. So we could be looking at a retracement of this impulsive move that started yesterday. So maybe somewhere into the 50 and the 78.6% of that previous impulse leg. So we are talking about hold on a second, potential TP target for sellers area will be between 2738.50. So we want to 2738.50 and 2748.50. That's about a $10 range bound structure. 2748.50. So that is what we'll be looking at, and that's about how many pips that is. That's between 100 to a 200 pips move if price drops that far. So you can screenshot my screen or mark out the structure on your own. That would be the TP target for a sell move. So if price comes into the zone, then we are looking at potential reversal setup to continue an uptrend move. So I will definitely be giving us updates on both my trading view and Telegram platform. So this is my simple view here. We have a simple trading setup. We'll continue to monitor price action around this area. Will it go to as far as the 2,760, or will it start the momentum all the way from 2,762 to the upside? So I do not know if you have any questions or further clarifications around the structure. If you do, feel free to drop them in the comment section. So I will take the next 5-10 seconds off. Let's see if there are any before we start rounding off on today's Forex Money Mastery. And don't forget to give the video a thumbs up. For those who clicked on the like button, thank you very much from the bottom of my heart. And for those who are yet to do so, please, it doesn't cost you anything. Thank you very much as you do so. All right, so in the absence of no questions, I think we have come to the end of today's Forex Money Mastery. It has been a great moment with you guys, and I'm very excited about the second half of this week. We are likely going to be seeing some high volatility, especially after the Fed interest rate decision. Especially after the interest rate decision coming up later today. So please, we are going to be preparing ourselves for this. And this is the purpose of this session, to navigate through the second half of the week. So I wish us all the best of luck on this one. So we took on all of the 3 assets on our watch list, which includes the USDJPY, the USOILSPOT, and the XAUUSD, all of which we were able to identify simple trading setups that we are going to be using to navigate this market. And to not forget, I do have a buy position already triggered on the gold commodity at this point in time. Please, I just need to let you know that one. If you want to follow me to capitalize on that one, please do right away. And I always remember that every decision we make in the financial market is always an educated guess. So whatever you do, have a well-defined risk management strategy in place to mitigate your risk, which is very important. And for those who joined me today for the first time, I'm very glad to have you around with us this morning. I do hope you had a great moment. I hope you gained a couple of things during the course of the session. And if you did, you want to be part of our subsequent editions, trust me, the more time you spend with us in this community, the better you get to comprehend my analytical approach, which could further help you in making your own independent trading decisions. So it's on this note, I would like to wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.